Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, May 4th. Markets continue to be range bound, 7 trading days in a row that we really haven't gone anywhere. FOMC minutes did not do it. ISM non-manufacturing that was reported yesterday did not do it. So we're going to look for something bigger and better, and I do believe that the markets right now, we need a little bit further evidence, but I do believe that the markets are in our 5th and final leg of this bull market run. We could chop around, go sideways for weeks and weeks, and that's what's going to happen. We might get a 6 or 7 day rally up to new highs, get all of the cheerleaders that are on CNBC, Fox Business News, Bloomberg, what have you, buy the market, and then at one point in time, it's going to disappoint, and that's that we're looking for right now. Timeline somewhere around July to October, and that needs to be tightened up as well. But we do and are getting very, very close here to where we would call probably a top. Not yet. We're not there yet. I am not calling a top at the moment, but you could see, and I want to show you one, and you'll see this many times, the NYUD, the advanced decline with volume. You could see clearly here, guys, that we have divergence. We are making lower lows and lower highs, while the markets are making new highs. Okay, so that's not a good sign for Mr. Market, because we have the internals, the breadth of the market, if you will, are not complementing what price is telling us, right? So that's something to keep an eye on. But remember, when you are in our 5th and final leg and we have sentiment that takes over, that is not a good sign either, but that does tell us that we are on our last leg. So we had the 4th wave minor. I do believe that we're going to break through 2400 and go even higher. Once we break through 2400, we'll put some projections out for you guys, okay? Next is going to be our money flow chart. Now, I don't show this all the time because there's no need to, but what you need to see is, let me open this up, is, as you can see here, this is the spider, same thing. It's a tracking ETF for the S&P 500. You can see that we've gone nowhere. French elections, which is also, it's actually rather funny that the markets pop up on a French election. But nonetheless, we are here, right? Let's go down. We have less than stellar volume. You can see that here. We're below our 50 moving average, way below, okay? And look what's happening here. Accumulation distribution, just about ready to cross below our 50 moving average as well. Okay, on balance volume, you can see here we're below. Now, most important, once you take a look at the money flow is negative. That means that they are not buying the market like they did back in November, or let's just say, forget about November, even 2017, the beginning in January. You can see that here. This is where the market consolidated and ran its course, and look what's happened here. It's clearly not the case, okay? And here's the force behind the move. Not so exciting as well. So this is what we really want to pay attention to. Money is not flowing into the S&P at the moment. Okay, we are getting bursts of buying and of course selling, but money is not really flowing in as much as it should be. Now, I did mention, and you've heard me recall, and I said that the inflows of S&P ETFs have been highest in 6 years. Outflows of managed money have been the highest in 6 years, and that still holds true. But you could see just clearly the last couple of weeks, last couple of months actually, money is not flowing into the ETF. We're not getting institutional money, I should say. Okay, something to keep an eye on. I want you guys to look at, especially off of your daily subscriber. Okay, ES, same thing, guys. No change from yesterday. 2400, 2378, 7 days in a row, literally sideways. Okay, you can see we haven't even unwound our MACD and our RSI, so we're still on buy signals, but we're overbought here in the RSI. But remember, last leg up, it's driven more on sentiment. Okay, next is going to be the NQ. Same thing. High is going to be right here, identified at 56.4275, and we're looking at an area here. Right where the Qs would be, it's going to be this area here. That's going to be your next real support area. Okay, that's what we're looking at, and then way down below. But let's not really worry about that at the moment. You can see that we're overbought. And again, guys, NQ, Facebook down, We had less than stellar numbers from Apple. All the big cap techs, they're not really doing what they're supposed to be doing. But unfortunately, we still continue to go higher, and that's going to be a recipe for disaster. It's only a matter of time. Do you short now? Absolutely not. You never, ever short new highs. Ever short new highs, okay? That's trading 101. What you'll do is you'll wait, you'll pull back the first, and you don't short the first pullback. You wait till the retracement rally comes. Is it a relief rally? Is it a corrective rally? Or is it really starting a new descent higher? But if that's the case, we make a lower high from this previous high. We take out the swing low candle. Then you get short, and you look for profit targets such as the gap fill area, the 21 EMA, and of course the TMT proprietary price channels. Okay, but as of right now, these are the two areas that I want you to keep an eye on. All right, for NQ. Gold, we could say that we really nailed the analysis on gold. We had our COT report analysis, and I mentioned that, well, if the producers are still short, there's no reason not to stay short if you are short. I wouldn't be a buyer. I also would not be a short seller down here in this area, only because gold can go either way. But I believe the way things are shaping up that we're going to probably end up down here to get the gap fill that we're looking for. And I mentioned in yesterday's video, I said, guys, we're going to probably get the shakeout we're looking for. I do think gold goes lower. I would be a better either short seller, or I would look for and wait for this gap fill and then reevaluate what's going on. Okay, it clearly states that the gold looks like it wants to go lower, and it sure does look like that. GDX, here's the culprit, one of the culprits. GDX is not rallying at all. And I mentioned, I got a bunch of emails. What do you think, Mark, about GDX? I said GDX looks sick. I wouldn't look to buy it. I wait for a capitulatory sell-off and look for a higher low or a double bottom. So right now we're double bottoming from this midsection, which really isn't strong support. Because why? It's in the light green. The dark green is heavy support. Light red is light resistance. Dark red is heavy resistance, okay, for the new subs that have just joined us today. But you can see here clearly that this is barely hanging on by a thread. If this thing breaks, and if this thread breaks, we're going lower. Okay, so this is something that I would not look to buy at the moment. If I want to buy here, or you say, oh, I like this spot here, then this is what I would like you to do. I would like you to buy it if it's going like this. If it's basing, right, and we're basing, and we take out the swing high, right, of the candle, that's when you buy it. And then you realize, okay, we got a new base. This base is higher than this base, and we're off to the races, right? Now it's easier said than done, but that's how you do it. That's how you play a trade, a stock, and that's what I want to do with gold. Okay, crude oil, another great analysis call. We called crude do not buy up here for our daily subs and our Pro Trader Premier video. A lot of the Pro Trader Premier video subs that trade intraday crude oil are just killing it right now. So the hats off to you guys. So you could see here, I said don't buy here. Why? Major, look at our volume analysis over here in the back. We have major resistance up here. We have cluster of price action not going anywhere. It dumped here the first time. Why don't you think it would do it again? Especially, we have a lower high from here, right? Lower high from this previous high. So absolutely great call. But now we're getting to a point where we're starting to get oversold a little bit. We're on sell signals in RSI MACD, but again, our oversold or overbought is not a buy or a sell signal. It's something to monitor until we form new bases and take out swing highs or swing lows, and that's when you guys get long and or short. So we're going into a very little support area, which we should break, and then we should move much lower. Now remember, I mentioned many times in my crude oil analysis, there is so much supply out there that if you just throw a stick in the ground in Texas, it's going to come up with oil. I mean, virtually in your own backyard here in New Jersey, New York, the tri-state area, Baltimore, Virginia, you're going to see oil. There's tons and tons of oil. New technology. There's no reason why oil should even have gotten at $57, okay? But OPEC wants you to think that way, and also the oil producing nations want you to think that way. Do your own analysis. Do not listen to the pundits. Don't even listen to me. Make sure that my analysis that I'm giving you, providing you, lines up with what your trading plan is about. Okay, very, very important. But most of these guys, they're all looking to get paid, and these guys are not. All of these pundits on CNBC, they're all writers. that they know nothing about the markets, and that's where I think that creates the most hurt, the most pain for the retail guys. Okay, next is going to be the ZB. Same thing, guys. Really no change. We've been kind of basing around here for the last 5-6 days. We need to take out this swing high right here. Okay, once we take out the 155, we could play a long shot for a gap area resistance fill, and then we will look to re-enter short. Okay, now, okay, why do I think that, Mark? Well, I think rates are here to stay. Let me just go through this TLT and I'll show you why. Here is the 200-day moving average. 124.80 needs to get taken out for a move higher. Other than that, it's just all wasted money. It's dead money until we take out this area or all the way down here, this double bottom area, and then we resume the downtrend. Okay, why? Well, before I go to the transports, let me show you what rates are doing. This is the 10-year. We defined this late summer last year. We had an ascending triangle. Here's the measured move target. Bam. Not only did it take that out, it blew it all the way out. Symmetrical triangle, took that out, and then rolled back over. We finally just made the 38% retracement. Why haven't we gone any deeper? Usually we like to get a 61.8% or 50% retracement. Why? Because rates are here to stay, guys. Okay? Rates are here to stay. Bonds, I believe, is completely done being in a bull market run for the last 30 years. I think rates, interest rate rising environment is here to stay, and that's when we look to short bonds. But remember, bonds will have its day as well, right? We have fear instance. We could just have, an overbought, oversold reading in bonds. In this case, oversold, let's say. But that's going to be better opportunity to look to trade, okay? Next is going to be the transports. Did nothing today yet again. Remember the thin zone here. If we break this and we lose this little zone area, ultimately, it's the 200-day moving average here in green. The green label, 157 here, 92. We have to lose that, and then we look for the gap fill right down here is the target, the first target area. That would solidify any type of big, large move to the upside in the markets, and that would give us the bearish case. Spiders, same thing, guys. Nothing, no change. 240.40, 238.40, no change at all. 7 days in trading range. We're looking for a catalyst here. IWM, secondary leader. Now, as you can see, transport's actually moving lower. Now, the spiders really didn't do much for 7 days, and look what we have, our secondary leader in IWM moving lower. Barely clinging on to our proprietary price channels here of 138.27, and the lower end here in red is going to be your next downside target of support. Your resistance is going to be here, labeled in red, and of course 141.80, 140.35. And last is going to be your Qs. Qs, guys, up 137.50, and the lower end here, support 136.80. Okay, that's going to be your top. High resistance 2 days ago, your support area here going into today's trade. All right, guys, let's see what happens. Let's get something going. We're trying to get this catalyst to push this market. I would love to see this market rip up higher another 5 to 7 days, consolidate, and then fail. And that's pretty much going to solidify a market top. Look at this huge thin zone. Now, be prepared. Okay, here's the level that I have. Here's the big level, the line in the sand that really needs to get taken out in order for this to alleviate any upside pressure. This is going to be the line in the sand. Yeah, we're a little bit away. I get you. But watch this, because this heel will flush all the way back down into the December highs. Okay, have a great day, everybody. We'll see you tomorrow. Take care. Welcome new subs, by the way.